Welcome to the presentations of the theme-based research projects under the theme Enhancing Hong Kong's Strategic Position as a Regional and International Business Center. Each presentation will last for 35 minutes, followed by a 10-minute Q&A session. Today, we are very delighted to have Professor James Wang as the facilitator of this session. Professor Wang is Honorary Associate Professor of Department of Geography at the University of Hong Kong and a Fellow of Chartered Institute of Logistics and Transport Hong Kong. Professor Wang is an expert in transportation geography, urban public transport in Hong Kong and China, as well as container port systems. May I now pass on the stage to Professor Wang, please?
Thank you. Good morning and welcome to this particular group of presentations. We have two today. Both are already finished. One on financial center, one on the port and logistics business. The first one is going to be presented by Professor Douglas Arner, who's from Hong Kong U, my former colleagues, I would say, and now I moved to City U. And this theme is enhancing Hong Kong's future as a leading international financial center. Please.
Thanks very much, James. And if I could perhaps invite my colleagues, Professor David Donald from Chinese University and Professor Chen Lin from Hong Kong U to also grab a spot at front, because I'll talk part of the time and I'll invite them as well during the context of the question and answers. As James mentioned, this project has come to a conclusion. It ran from 2012 to 2017. But what that means is that actually we are in the final phase of wrapping up the project. So it is definitely not at an end from the standpoint of those of us involved. In many ways, this last year of wrapping up in the context of the final report is key to really the success of the entire project. So, if we think about this project, enhancing Hong Kong's future as a leading international financial center, the genesis of this project was very much in the aftermath of the 2008 global financial crisis and the implications for Hong Kong's role as an international financial center, but also for finance generally around the world. And so much of the work actually commenced in the context of an application in the very first round of the TRS. And I think if we're thinking about Hong Kong as an international financial center, some things have stayed largely the same from really the time of the global financial crisis up to the present. Others have changed quite significantly. One thing, if we think about Hong Kong's history, is that Hong Kong has always had a significant role as an international financial center. This role, however, from the late 1980s, particularly after the 1987 stock crisis, the failure of the futures exchange, the closure of the stock exchange, and the Hay-Davidson report, which came in 1988, has seen a process of moving from something that was largely a sort of Wild West financial center to one which has regulatory and business standards very similar to other leading financial centers. That has been one theme. That same time period, really from the late 1980s, early 1990s, marks a second major theme in Hong Kong's transformation as a financial center. And that has been its role, first, in financing money going into China, and more recently, particularly in the aftermath of the global financial crisis, increasingly financing money going out of China. And I think if we're looking at Hong Kong, in the aftermath of the global financial crisis, lots of articles about the future of the world's two leading financial centers in particular, London and New York. And One thing that has not changed during the time of this project is that London and New York remain the two world's leading financial centers. The other thing that has not changed is that Hong Kong and Singapore continue in most indices to trade places for third and fourth most significant international financial centers. What has changed is that the gap between London and New York and Hong Kong and Singapore during the period of this project, and certainly since the aftermath of the global financial crisis, has gotten smaller and smaller. And if we look at Hong Kong at the beginning of this project, certain things remain the same. If we think of equity markets, Hong Kong remains very frequently the world's leading center for money raised in initial public offerings. Probably not this year, but it was the last 2 years. So this is a continuing theme. Something that has changed in the context of equity markets really stems from an unexpected crisis in mainland China's securities markets 2 years ago, which has then been built on in the context of new connections. Shanghai, Hong Kong Connect, Shenzhen, Hong Kong Connect, Hong Kong Bond Connect, which has increased the role in many ways of Hong Kong's integration with mainland equity markets. In debt markets, certainly we would have thought at the beginning of this project that one of the most promising future avenues of Hong Kong's future development as a financial center would be for RMB international debt. But the reality is that a decision just over a year ago from the mainland to largely open its interbank bond market to institutional investors, combined with the establishment of Bond Connect operating on a northbound basis, has largely meant that international investors go straight to the mainland bond market, which is now the world's third largest. And Hong Kong's outlook as an RMB debt center is not looking so promising, in contrast to equity. Two areas, though, that I think have struck us from the standpoint of surprising changes: Forex, foreign exchange, and derivatives. Today, if we look at the most recent statistics from the Bank for International Settlements looking at daily foreign exchange and OTC derivatives flows, at the beginning of this project, the 2010 survey, which was the most recent when we started, Hong Kong's role in Forex and derivatives would have been in the top 10, but not very significant. Most recent BIS survey on both Forex and derivatives shows Hong Kong as the world's fourth most significant center. Now, in the context of foreign exchange, that means foreign exchange transactions of about 400 billion US dollars a day, not very far behind Singapore, which is in the third most significant position. That has been a big change. What has changed? Well, primarily the role of the RMB, and that Hong Kong has emerged as the most important center for trading in RMB and related foreign exchange transactions. The other that has been a surprise, certainly, is in the context of derivatives. The context of OTC interest rate swaps, about $2.6 trillion a day globally, Hong Kong has moved ahead of Singapore. Many will think that Singapore is the more important derivatives center, but on most recent statistics, it is actually the US, UK, Paris, and then Hong Kong. Singapore comes a couple of steps down. Now, what has happened? Well, unlike debt, it is actually far easier to structure, in particular, OTC derivatives transactions, particularly relating to the RMB, via Hong Kong than elsewhere. So, I think from the standpoint of when we started, Hong Kong's position as the third or fourth most important financial center has solidified. That very clearly we have seen this trend of narrowing the gap between New York and London closing. And in some areas, some surprising developments. And if we look at the significance of this project, I think it's something that we initially began with basically looking at the situation of Hong Kong as an international financial center. And I think most are familiar with the fact that finance makes up the second largest component of Hong Kong's GDP. It makes up a large component of employment as well. And of course, this is cemented under Article 109 of the Basic Law, which requires the government to maintain an economic and legal environment to support Hong Kong's competitiveness as an international financial center. We did, in looking at employment composition, and in particular comparing it to major centers like London and New York, discover something interesting. And that was in the context of business and professional services employment numbers, that Hong Kong has a smaller percentage of the workforce employed in business and professional services, things like legal and accounting, which play central roles in supporting the financial sector, than London or New York. And actually, if you combine employment in, as designated in Hong Kong statistics, financial sector with professional and business services, it some years actually is a larger proportion of employment than logistics. And I think what this highlights is that from the standpoint of services, particularly in professional services, there are real opportunities. Now, looking at IFC evolution and competitiveness, in the context of this project, when we begin to look at Hong Kong's role, the key point is that you can't look at it from any single direction. And in order to analyze our central questions of, one, what are the elements underlying Hong Kong's success and future, as well as major issues, we had to bring together people from a large number of backgrounds. And I think from our standpoint, this has been one of the most interesting aspects of the project, are the conversations. But I will highlight something that came out of one of the questions in the first session. And that is, despite the conversations, it remains difficult for disciplinary publication reasons to actually jointly publish papers. What we find is that very frequently we spur ideas across one another, that our support teams interact a great deal, but the disciplinary specifications often make it very difficult to actually publish papers in cross disciplines. It's an interesting experience. So, on the basis of the baseline research, we went in with 4 major issues. We focused on governance, and initially this focused on corporate governance, but some of our most interesting research has actually taken a quantification approach to legal and institutional systems in order to subject those to economic analysis, and we are getting some very exciting and interesting results. The second, a focus on China's going out, in particular, RMB internationalization. Third, not surprisingly in the context of the global financial crisis environment, a focus on global financial regulation and the changes coming out of that, and a focus on human capital development, and a series of works looking at all of these things. But I think what I really wanted to highlight are a couple of things that surprised us. And I'll ask Chen and David to also comment on some of the things that surprised us. I think one surprise was this idea of professional services employment. When we looked at the composition of employment, realizing that Hong Kong's employment levels in professional and business support services were lower than comparative financial centers. This, I think, was a surprise with very important policy implications for Hong Kong's future. The second thing that has been a surprise were some of those developments. In other words, I think many of us would have said when we started that Hong Kong's future in terms of equity, particularly for Chinese companies, wasn't particularly bright. Why? I think many of us expected that over time, the liquidity would migrate from Hong Kong to the Shanghai Stock Exchange in particular. But the market turmoil a couple of years ago and the government response to that in the mainland have largely, I think, meant that that has not happened. I think the other surprise in the context of that analysis of Hong Kong's financial center composition has been the development of OTC derivatives. This is something where there has, for a very long period of time, been a perception that Singapore is and will remain the leading derivatives center, and factually, it's simply no longer the case. And I think that was an interesting surprise. The other thing that I think really surprised us was something that has happened really over the past 5-10 years in the aftermath of the crisis. And that is a technological transformation of finance. And this, I think, chart shows simply the emergence of the word FinTech. And just simply the use and emergence of the word signals an explosion in questions, thinking about this. And if we look at, in particular, the context of China, China's financial system, in an amazingly short period of time, has completely transformed in the context of the role that technology plays in this system. In many ways, China's financial system today is in a position that we haven't seen for a very long period of time. It is leading the world in the context of technological evolution and transformation, and this is posing a huge number of interesting new issues and challenges from every direction. And I think if we think of technology, as everyone will know, technology has a long history in finance. But two things have really changed in the past decade or so. The first is the who. In other words, we have seen an explosion in startups. Hong Kong, Singapore, the UK, others, competing to get new FinTech startups. But particularly in the mainland, we've also seen an explosion in the role of tech companies like Alibaba and Tencent in the context of financial services. And this has completely changed the environment for financial services, first in China and increasingly across the region. The second change is speed. The speed of technological change which we are seeing is something which we have never seen before. And this makes it a very exciting time for this subject, and not surprisingly, we've spent a significant amount of time over the past 2 to 3 years focusing on related issues. And I think when we're looking at FinTech today, we see it as something that impacts every aspect of financial services. And it's something that if we look at Asia, coming into the context, the factors that we see, if you look at China, factors that led to rapid development, one has been a traditional financial services center that was largely inefficient at doing many things, combined with very high smartphone penetration rates. That combination of inefficient traditional financial systems and high smartphone penetration rates mean that across Asia in particular, developing Asia, this transformation is beginning to take place in an increasing number of countries. challenges are the fact that things can move from what we've categorized as too small to care to too big to fail in record time. Perhaps the best example of this today is Yuebao. Yuebao is a money market mutual fund established by Alibaba, run by Alibaba's financial services subsidiary, Ant Financial. When it was created, it went from $0 to $100 billion in assets in less than 1 year. Yuebao is today the world's largest money market mutual fund with over $225 billion in assets. And this has happened in less than 5 years' time. That is moving from too small to care to too big to fail in record time. We're also seeing a very interesting development, which is the application of technology to regulation, what we would call RecTech, the idea of that if you are using technology to deal with, and think for instance of Singles Day. Singles Day, $35 billion in transactions done in one period. The only way that can be done is via automation. In fact, Alibaba's complaints procedures are 97% handled by AI-based chatbots. Now, from a regulatory standpoint, the only way that you can keep track of these developments is for regulators to be using technology. And I think that that is one of the most interesting challenges coming out of the FinTech revolution, is the challenge of using technology to understand finance. I think one of the biggest issues for Hong Kong in particular is the context of human capital. We know that if we look at Hong Kong, we're very strong on the fin side. But we also know that we're not as strong as we should be on the tech side. And this is an area where, from the standpoint of Hong Kong's future as a leading international financial center, this is very much an existential question. The chances of getting completely left behind are non-negligible, which means that from the standpoint of this project, perhaps one of the most novel and interesting issues that has emerged is something that we really hadn't thought about at the very beginning, which provides both a massive opportunity for Hong Kong, but also a massive risk. With that, I'd like to turn it over to maybe Chin for a couple of minutes, and David, just to comment on things that they found interesting.
Thanks, Doc. So Douglas wanted me to mention something that I didn't anticipate, during this the past 5 years. There's several things, of course. The first thing, I just give you 3 quick examples. Okay, the first thing is I would say the Bitcoin. Okay, in 2009 you can use $1 to buy 1,300 Bitcoins, and now one Bitcoin was traded about the highest price is about $19,000 yesterday. So it is the single asset in the human history that generates this kind of return, which is about 20 million times of return during the past 10 years. If I would have anticipated that, I would certainly invest at least $100 in that, 5 years ago. So that's one thing. But that shows you that the significant change in FinTech, and also in this, and people are talking about blockchain all the time. I just gave it. The second thing I didn't anticipate is the number about the amount of the third-party payment. When we started this project, the total amount of third-party payment in China is about 1 trillion RMB. And this year, the estimated number is 120 trillion RMB. And most importantly is the size about 20 times of that in US. So on this regard, China is surpassing US by a large extent. Okay, so in many cities like Shenzhen, like Hangzhou, there's so-called no cash cities. People don't even carry cash. You use the WeChat, you use the Tencent Pay or Alipay in almost all the occasions. So that's certainly something I didn't anticipate. Okay, the third thing I didn't anticipate is the lending system. We have a joint project with Alibaba, and so they have been doing extremely good in terms of providing lending to the small and medium-sized enterprises. The major difference is they don't need those borrowers don't actually have their financial statements, they don't have collateral, and they don't have lending relationship. So this 3 no basically violates all the lending principles used by traditional banks. But they have been doing so well, the total amount of issued loans is already surpassed 1 trillion RMB, and then the whole funding model was backed by the so-called asset securitizations. So the major bank actually participated in this, and the whole securitization was led by non-traditional firms like Alibaba or Tencent. So based on the 3 examples I gave, you can see the technology is changing the currency system, the payment system, and also the lending system, which are actually basically the cornerstone of the whole financial system. So if I would say, I actually find more questions to studies for the following years than before, because things change very, very rapidly during the past 5 years. So I would feel very fortunate if we can get another TIS to study on all these issues. But this is really important issue to studies. And people are talking about not only this trend, but also the implications of this on the financial stabilities. For example, like a digital currency, people have very, very, different, sharp different views on this. So, it's a short presentation, but I just want to share some information with you guys. Thank you very much.
As Chen mentioned, Doug asked us to bring up a couple of things that we found surprising and that the project opened up. I'd like to focus on 2 things. One, coming out of the collaboration. The collaboration team, we brought in 3 lawyers and 7 persons who were very strong in quantitative studies. And from the point of view of collaboration, I learned a lot, and I think produced deliverables which show the link between a lot of the work that we may be doing on a qualitative basis and the kind of technological revolution we're seeing taking place. The problem I found necessary to approach was the link between qualitative and quantitative, and then how the empirical studies were making that. And then in examining that, and in dialogue with Chen and other co-investigators, you could see that empirical work that scholars are doing would lead into the modeling work, and the modeling work would lead into the algorithms, and the algorithms would lead into the possibility of automation. And so during this project, the link between academic work and what we're seeing in data analytics and machine learning became extremely vivid. This is something which would not have been possible without the level of collaboration and the interdisciplinary team that we set up. A second point is to re-emphasize a point that both Douglas and Chen made, which is the changes which have taken place. I came in to the project basically with a comparative law point of view that we have lived through a time where American law, American regulation, and the American economy had been the dominant model, at least since the fall of the Soviet Union. And during the project, after the global financial crisis, we saw visible indications, as Douglas was describing, with the growth of financial technology in China. We saw visible indications of alternative models being created. Let me just mention 3 that came out of the project. So first of all, the idea that a corporation should be clean of any form of non-economic behavior. Hong Kong is permeated with family firms. China generally is permeated with family firms. Also in mainland China, we have very significant government intervention in corporate affairs. And it became very clear that the corporation is a much more complex picture than what we have of the dispersed shareholding model that comes out of the United States. And this allowed, this collaboration allowed scholarship, which then establishes the possibility of an Asian model as something quite realistic. Another point is on enforcement. In the United States, lawyers take a percentage of the wins in litigation, and for about 15 years we've seen heavy emphasis placed on private actions to police an international financial center. And then during the collaboration, we found that Hong Kong, as in basically the rest of the world aside from the United States, has a heavily public model of enforcing its financial center protection rules. And so these were 2 points where international scholarship started to turn to respect a model which could be an emerging model after the 30 years we spent with one particular model. The last one, as Doug mentioned, with the stock and bond connects, presents a radically different model than either the United States or Europe for joining markets. And this was something that was pioneered in Hong Kong and in Shanghai and Shenzhen, and is becoming a highly viable model that can benefit more from modern technology than the US model. Just to put it briefly, the US model looks a bit like setting up shops to sell something that's produced at the factory. So the factory becomes the stock exchange, and we set up a number of shops to sell the shares, and the shares are matched in many different places, which destroys liquidity. It destroys the concentrated market, and China has preserved that market. So during this project, we've seen, as Douglas has described, major historical trends taking place. And we've seen also the movement of scholarship at a relatively micro level shifting. And it was the collaboration that made this possible. And I think we'll see, as Chen mentioned, just the beginning of a lot of work in this area that is going to be engaging with these new and powerful trends. Thank you.
I'm very interested in when Douglas mentioned the FinTech versus RecTech, which seems to be the case that one side is left behind, the FinTech leading, the RecTech is following. But I have, as a layman, I still learned something about so-called blockchain, which is on the structure of the Bitcoin. The money, what is it? Bitcoin, not Bitcoin. Someone said from social perspective, this kind of a blockchain means decentralization. Is that the case if the BitTran or this kind of infrastructure going to be developed further, that the center of Hong Kong as a financial center is going to be weakened?
I think an interesting question, and this is something we could probably spend days talking about. If we think about what Bitcoin is or what blockchain is basically a combination of 3 different technologies. It is cryptography, it is distributed ledger technology, basically distributed as opposed to centralized record-keeping systems, combined with smart contracts. And smart contracts are basically self-executing transactions or rules within that environment. The idea of blockchain, and it's something that as human beings, a significant amount of research suggests, and this goes to the Bitcoin bubble point, that we invariably overestimate the impact of technology in the short term and underestimate the impact of technology in the long term. Hence, if we look at the 1999 tech bubble, certainly things were overvalued in the context of the reality at that time. But if we compare what are the world's today 7 largest companies by market cap, they're all tech and internet companies. The reality of the transformation which has occurred since the 1999 internet bubble is actually far more than we imagined it would be in 1999. And I think the same is true with blockchain. Blockchain, distributed ledger technology, smart contracts, cryptography, all of these technologies together have the potential to change the underlying infrastructure, the plumbing of the way markets work. And that is what we're already beginning to see rolled out. From the standpoint of Hong Kong, what it means at the core is that the nature of employment opportunities and human capital demands in the financial sector is changing incredibly rapidly. And from the standpoint of the university sector, we need to be thinking very, very quickly about how to make sure that our graduates have the right combination of tools to be relevant as this transformation continues.
Thank you very much. Any further questions? Professor Chen from Chinese U.
Yeah, Professor Anna, I think you mentioned that the gap between Hong Kong and London, New York is closing, but I want to know in which dimensions or aspects that the gap between Hong Kong and London, New York is much larger in terms of technology or human capital or something else. Which aspects we have the largest gap?
You know, in financial centers, we focus on a range of sort of competitive factors, but two that we saw over and over across sort of historical or comparative analyses are political economy, and the other is often path dependence. In other words, London tended to be the place where most international transactions prior to the global financial crisis were booked regardless of where the deal making actually took place. The big thing that has changed from the standpoint of London and New York is a realization that there are negative aspects to hosting a very large financial center where you have financial institutions that in terms of balance sheet size are a multiple of domestic GDP. And as a result, many of the post-crisis regulatory changes have been focused at perhaps shrinking balance sheets, but also pushing parts of financial institutions to other places. So one of the biggest impacts for Hong Kong has been an increasing use of Hong Kong as a regional international booking center for Asia-Pacific transactions, not only for international financial institutions, but also increasingly for mainland financial institutions. From the standpoint of the traditional financial sector, actually, Hong Kong doesn't have too many problems, other than perhaps our government hasn't been as proactive as it could have been in the context of thinking through the implications of regulatory changes. We did find that the regulatory cost structure of Hong Kong tends, oddly enough, to actually be higher than many other jurisdictions, often because of the complexity of our regulatory system. Where I think our real weakness is going forward is as this continuing tech transformation takes place, and the fact that our traditional strengths in Fin need to be married with strengths in tech. And this is actually exciting, I think, from the standpoint of tech development in Hong Kong, because we're not trying to attract new industries that are not already here. Financial services is already here, but it is now demanding a different sort of person. And this may well offer some of the most exciting opportunities for STEM graduates in Hong Kong going forward. But this is an opportunity that Singapore, Shenzhen, London, Sydney are all very actively chasing. And we're a little bit behind in the context of that process.
Just very few points. I think things have changed over years. 10 years ago, if you look at the largest 10 market cap company in the world, 3 out of 10 are financial companies, like ICBC, Citigroup, Bank of America. Nowadays, if you look at the largest 10 market cap companies in the world, 0 of them are financial companies. 7 out of 10 are tech companies. So nowadays, banks are not only competing with banks. The business model has been changed. The banks are actually competing with tech companies. So I actually have more concern than Doug on this, because Hong Kong is lagging very behind on this regard compared to China. So I'm sitting on the currency board of HKMA, so I always talk with Norman and the other guys. I said, look, we have to do something on this, because with the speed of development in this area, if we didn't do anything on this, 5 years later we'll be very lagging behind. So that's my point.
We can take one last question.
Can I answer? Doug, this is a question for you. In your presentation, you mentioned Hong Kong's data market is not as expected back to 5 years ago. When the central government with the proposal Build and Road initiatives, and our Hong Kong government wants Hong Kong also will play an active role in facilitation, finance facilitation. From this angle, what is your sort of a reflection on the Hong Kong's international finance center business?
Yep, exactly. I think the key is that in infrastructure financing, there are a lot of opportunities here. I think there are also a lot on the FinTech side. And actually echoing Chin's point, that if we don't move on the FinTech side, particularly in the Belt and Road context, we can very quickly miss that boat. Yeah. On the debt market side, there is, because of the policy environment right now, opportunities for foreign issuers raising an RMB in Hong Kong, but that can quickly change. So I'm optimistic from the standpoint of infrastructure financing structuring, but not necessarily from the debt financing side of it.
Last question.
Just a quick one. I'd like to talk, and I like the first slide and the last slide. And the first slide gave the history. And I was struck that we've always had a dark web. That is, in the sailing ship days, it was smuggling. In the middle of the 20th century, we had the black market. And today we have cybercrime and things like it, which have to be penetrated, and we're going to need more sophisticated regulators. What's the approximate size of today's equivalent to the black market or the smuggling enterprise? That is the number and scale of transactions which are operating outside the realm of regulators.
I'll take the general side, and then Chen may have a comment on the Chinese side. The most recent data we have from the Financial Stability Board, which is the global regulatory authority, basically suggests that even today, 10 years after the global financial crisis, about 1/3 of the global financial system falls into what we would call the shadow banking sector, the largely unregulated sector. And as it happens, for a variety of historical reasons, Hong Kong has one of the world's largest shadow banking systems. And as I'll pass it to Chen, China today has one of the largest and fastest growing shadow banking systems.
Yeah, I mean, the things you have seen in the US, they become very prevalent in China. Securitization, CDS, all kinds of structured products, local government debt, everything is very prevalent. So, but certainly because many of these assets are off balance, so in the so-called shadow banking system. So what's the implication of the systemic risk generated from these assets is still a big research question. So that's also something I think is quite important too.
So when we talk about this as a black market, we remember that in the West, before the global financial crisis, the entire hedge fund industry is unregulated, right? So the entire hedge fund industry, and that's not normally what we think of as a black market. That's basically top end. And then for this project, a couple of papers that have come out on the political economy in China have basically blamed regulation. I mean, because Chinese regulation has controlled interest rates and favored state banks and created a massive shadow banking network, which Chen referred to. And we've reached the point where you have a shadow banking system that the government then bails out, which is quite unusual. And we saw that in the US in the 1990s with long-term capital management being bailed out indirectly by the US government.
Thank you very much, and I think your presentation is excellent, and we have a very challenging questions for you, and your answers also very challenging as well to the audience. So we have time limit, so we have to end the first group presentations. Thank you very much.
Thank you, Professor Arner and his team. Please join the audience.